All right, so good morning, everyone. I hope you had a great evening. Good morning so far, and ready for another exciting day. Um, all right, so I'll start with the market, and I have a few things that I want to talk about. Stop me if you have any questions. Um, but yeah, so first of all, uh, market wise, right? So obviously there was this gap. We discussed the digestion, which if you look at the Qs and QQQE, you kind of see a different picture where if you look at the Qs, you basically have that gap. Yesterday we kind of retested the lows ish of that gap bar, uh, slight higher low, and we closed above the prior day's high for a confirmed daily reversal, right? So now it's gapping up. We had CPI, the Qs are up a quarter of a percent. And the good news on the Qs as well is that we reclaimed the 10-week moving average structure. So weekly looks like confirm the end of a larger correction that we were in since basically that when that fail breakout was made at the end of January. Um, and yeah, so will that create a new high? Will that create a new trend? Will that create a lower high and rollover? Guys, I don't know. I'm not here to tell you what will happen. I'm just trading what's in front of me, all right? And now in the last few days, I'm a bit more analytical and trying to provide some clues as is this trend can hold, etc., etc. But at the end of the day, and probably starting next week, uh, you'll have a very different story and message from me, right? So if you've been around when the start of that trend get confirmed, and we're starting to trend, which is not the case yet, right? So we just had that QQQE 24 DMA structure, 21 DMA structure reclaim, sorry. Yesterday was a small digestion day. We pulled back a bit. We're very close to the now rising 21 DMA structure. When we get that back test on QQQE and we confirm strength, we reconfirm a daily reversal, so meaning that we retake yesterday's high. Uh, we make a new high from here, meaning that we now have a new higher high. We now have a new higher low, which is confirmed but by another a second higher high. Then the uptrend structure wise is confirmed, right? And when that happens, with a McClellan summation in an uptrend above the 10 DMA, and the summation is not overbought yet, then I'm I'm kind of stepping back from over analyzing the market and just recognizing that price is an uptrend above a rising 21 DMA structure. Breadth is in an expansion cycle, and that cycle is not overbought yet. And as long as internals, and what I mean by internals is credit spreads, VIX, Bitcoin are also in an uptrend above, well, declining 21 DMA structure for the spreads and the VIX, and above a rising 21 DMA structure for Bitcoin, then what I do is I focus on my exposure, on my own positions first. All right, I focus on the liquid leaders. If price on the Qs is not extended and we're coming back into the 21 DME structure area on the market, on the Qs, on QQQE, then it's time to focus on the liquid leaders, how they act. Are they providing entries around their own 21 DME structure? Oh, thank you. Here's the screen. Thanks, my friend, for the reminder. So, what was I seeing? Yeah, so if the leaders are at the same time as the market cooling off a bit and coming back into the structure, if you get the same type of action in some of the leaders, then you get your entries, you get your hat points, and that's how you play a power trend or any trend, right? And you never know when it will end. So sometimes that trend will be for months, and you get to a point where it will stop when the McClellan summation is overbought. But sometimes we can flip before, like early 2025, where the McClellan summation just flipped above neutral, not even overbought, and that was the end of that trend. So you just never know, and you cannot go into a trend, into building exposure and managing your portfolio, trying to guess how long and how far that trend can go. All right, that's not the right mindset. You just go in, you pick the leaders, you trim into strength, you de-risk your trades, and then you trail the structure and you trust the market gods. All right, that's very important. You put yourself in a mindset that you don't know where those trades will go. All right, that's the same thing that happens with a GLW, for example. All right, we took a good entry in the weekly structure, good entry on the 21 DME structure, reclaim and backtest. We had a good push in the last few days. That trade is trim at 2R. Stop loss is raised at the 21 DME structure. So from there, you don't try to guess what will happen. Do we have a 100% move? Do we have a 25% move and then it will roll over? You just can't know. And it's not worth your time, energy, and that will probably just make you fuck that trade, right? So just go in knowing that, okay, my risk is covered. I have my 21 DME structure or whatever you want to use, right? And as long as it holds that structure, the trend is alive. The trade is alive as well. All right, and when we break that, then it's time to close that trade and call it done, right? So that's the mindset that I'm now putting myself, now that we have the reclaim of daily and weekly structures, and that most importantly the McClellan summation index is coming from an oversold condition similar to last April and January, and that we're still oversold. All right, that's what I shared this morning in the Q&A channel, is that it's super constructive to see that McClellan oscillator being overbought here. Look what happened in last April, and I know I talked about that already, but it's worth repeating. We became overbought on the McClellan oscillator on April 23. All right, let's look where April 23, where we was price-wise. April 23 was when we retested the declining 21 DME structure. So if you stop yourself because you don't want to engage when And that was the same thing on bread extension, by the way. 25 April. All right, so stocks above their 5 DMA. So if out of a correction you want to lock yourself out of a market because short-term bread is overbought, then you lock yourself when the trend actually is just beginning. All right, so that's why I shared that this morning, and I think it's very important when we're coming off a market correction. Don't look at short-term bread extension and oscillator. It's good to see that overbought condition. All right, focus on the McClellan summation. Just acknowledge that this trend might just get started. And again, I'm speaking like the trend will go on, but I have no clue, right? If I'm getting stopped off my position, that will be the end of it, and I won't argue with it. But I'm just used to see that picture over and over and over again, and I know that short-term extension and overbought early on as we try to reclaim the structure after a correction, that's not a signal. That's strength. All right. What will hold you from buying? All right, let's switch to this, to the cues. I shared that this morning. It was on my other computer. All right, this here. This one. Whoa, sorry. All right. No. So this at 2, this one at 5. All right, and we copy this here. Why is it not working? Okay. This here at 2, this at 5. We activate that. Okay. So, all right. So now you think that we are very extended, right? All right. I'll take the question after. So now you tell yourself that we're very extended, but is it the fact, right? So what I like to use is ATR extensions from the 21 EMA and from the 10-week moving average, all right? So obviously the 21 EMA is used more for short-term intermediate term trend, and the 10-week moving average is more for the longer trend, right? So usually what happens is when we hit those 2 times HER from the 21 EMA, like last April, sometimes we get kind of a strong lock, like frozen rope type of trend, and we can stay elevated and extended for a bit. But when we get those small gray circles, it means that price is at 2 times the HER from the 21 EMA. That's usually a good spot short term to signal price extension. All right. And the small pink bars are extension 5 times HER from the 10-week moving average, so the 50 DMA. All right, so that's usually when we get more meaningful pullback and correction. All right. So those are not random numbers. All right. That's what I use for a long time. Uh, so yeah. So last April we started with a similar condition, and it took a couple days. And for the question, I've read it a bit cross-side, but you get those pullback to the 21 EMA, or at least some weakness early on in the trend before we get to 2 times ETR from the 21 EMA. All right, so those are the positioning opportunity. All right. So are we that much extended right now? We are at 1.6 time ATR from the 21 EMA. So we're getting there short term. All right. So if we can get some sideways action, and again, I'm coming back to the same scenarios, but we're right in the middle of that chop box of hell that we're trading at before that new low was made. So do we retest that 616 area, and we need to digest, backtest, maybe just let the 21 EMA catch up a bit? Do we reclaim with a lot of strength, hit some 2 times ETR extension short term, need to backtest that 616 base pivot, and then build from there? I was also ready to just go and backtest the 594 and 21 DMA structure from here. That's still a scenario. It doesn't mean that because we gap up so far this morning that it will hold, right? So don't lock yourself in an idea. That's important. But you have your levels to kind of assess the price action around. How will price action acts now that we are above that gap high pivot? How do we act if we go to retest that 616 base pivot? That's all the clues that we will get. All right. But I just wanted to highlight that even short term, we're not extreme extended. All right. We're not even at 2 times ETR from the 21 EMA yet. And longer term, we're still just at 1 ATR from the 10-week moving average. We're just trying to reclaim that longer term SMA, sorry. All right, so let's take that question now. And what would your mindset be now if you ran so well positioned, like some of us chickens, waiting for backtest of the leaders or going for the laggards? I think, and that's something that I shared last night in the Prime report as well, in the game plan. If this thing is real, you'll have entries in some names, just like yesterday, right? Doesn't mean that it always work, but you can look at entries in leaders that show leadership during that correction, and now it seems that there's a rotation. All right, it's not leaders dying out; it's rotation. So they take money that they allocated to these EP winners, right? That was a store of cash, if you could say. And now that the market is healing and setting up for maybe a new market cycle, then my guess is they rotate that money, and that creates those quick pullback to rising structure. It doesn't mean that a Fastly is dead. Just mean that it was extended. And when you buy extended, that's what you get. All right. Other names like APLD, for example, that were a bit more laggard, but went with the market, but are still long-term winners. So you can look at 6 month, 12-month RS and get those recently uh, longer term leader that corrected with the market and just trying to reclaim and backtest their 21 DMA structure, just like APLD. And that's an example. Doesn't mean that go for that name, but what I mean is that's the kind of action from prior longer term leader that are just trying to turn the corner as well. Uh, Names like Digital Ocean, Dawkins, have been a big leader, but just needed to break. That probably they needed to rotate that money out of those IRS name that did very well during the correction and just cool it off a bit. All right, that's the kind of names that if you're fully prepared, you can catch as they cool off into their rising 21 day structure while the market is showing just a bit of weakness. Yesterday was just a bit of weakness. So you can go in each day, look for that market weakness as long as we're not 2 times ATR from the 21 EMA. The closer to the 21 EMA on QQQ, the better, right? I won't say uh, that you just have to buy if we're at the 21 EMA on the Qs. Because if that trend is really, really strong and they keep it alive each day and we get a lockout rally, then that might only be the opportunity that you get. All right. Uh, but as long as we're not above 2 time ATR on the Qs, and that you buy right these leaders, all right, close to their 21 DMA structure. That's the kind of entry like Fastly I did yesterday. You stock them and I have my TradersLab scan that really helps me a lot, right? Uh, right. So my 21 DMA structure pullback, that's what it does, all right? And I want to see them a bit before they get into the 21 DMA structure, like PL. PL is a good example. Imagine that we had some weakness, a bit like yesterday, early on in the session. PL on weakness, you stock the most recent swing low on April 7th. You stock the retest of the rising 21 day mid structure. You stock tight action as long as it's below 1 ATR from its own 21 EMA. And that creates opportunity in leaders. And listen, a trend, that's why you don't want to lock yourself. There will be rotation within those leadership group between memory, between photonics, between semiconductors, between those aerospace names, um, Dawkins and Fastly, kind of those cloud names, and that's what keep a strong trend alive. So it's important not to just look at the indices and say, "Oh, we're not into support, so I'm not buying." But the market just can keep going, and even if it's pulling back to the 21 EMA, then maybe they rotate into a stronger leadership group, like the memory stocks, for example, that did very well early 2026. SNDK, WDC were leader even if the market was going sideways and pulling back. So that's the type of routine and analysis that you need to be aware of. That right now, space names are coming back. All right, so they might set up while the market is going up, and they might work while the market is correcting or just pulling back or digesting. All right, that's the dynamic that you need to uh, go see a bit beyond that major in this action. I hope it's clear. Does it answer the question? And keep in mind that that's how I trade, right? Uh, I like to use fast progressive exposure, have good exposure early on, and then chill during that trend. All right, that's how I like to trade. And I'm fully aware that in the last few months, I will get it a couple times, that's for sure. But when I nail it and I can go beyond my initial 50% exposure that I'm hit on in the previous month, but now in the last few days, I was able to ramp up that 40-50 exposure to fully expose fairly quickly. Then if we have a good day today, I have a double digit week. And I'm already almost out of my drawdown. Not drawdown, sorry, not from that high. Year to date. So that's how I trade. All right. So don't compare yourself to my exposure if that's not your style and if you don't have that risk profile. All right. I'm only trading that way because over time, after many market cycles, I just recognize that it's how the market moves. And I hate that pain of having to chase a trend, of having to battle exposure when the trend is engaged. And I feel much more comfortable recognizing the relative strength, recognizing how the charts are setting up into events, into news. It can be anything. Sometimes the market is just setting up and waiting for that catalyst to happen to explode. That's what we saw this week, right? And sometimes it works, sometimes it doesn't work. So, a quick question about TL scan is asked when something new shows up, does it send an alert or do you have to bring in from of the screen? No, it does not provide alerts. I really have that on my second screen, and yeah, I'm just watching them in real time. We don't have any alert feature set up at the moment. Um, yeah, so I agree with everything you say. Just mentally, I'm far away from executing like you. Uh, guys, I've been trading for 10 years. Uh, I fucked up a lot. Fucked up a lot. Uh, I learned a bit into each market cycle, and it created the traders that I am today. Uh, so give yourself the time to learn. Each market cycle, you will gain confidence. You will learn as well. You will develop that confidence that how the market cycles work. You will develop the skills to recognize priors to those momentum bursts, how those leaders are shaping up before that happens. And each market cycle, you will feel a bit more confident in putting some weight, some exposure um, before it happens. And that's how you will grow as a trader. Don't think that because you see me doing that one market cycle, that you will be able to trade the same way. First, not everyone has the same risk profile. Maybe you will never be able to trade the way that I am. And that's okay. Develop your own style based on your profile, on your skills, on the way that you're built, right? Uh, and build yourself as a trader each market cycle. Each market cycle, analyze how you did. All right. Uh, Look at your system, fine tune it, not change it, fine tune it. So define what you should have done a bit differently to capture those names a bit earlier. All right, that's the time to acknowledge that. That's the time to refine your rules, come up with a few fine-tune rules or ideas or things to test the next market cycle. And that's how you grow as a trader over time. So, portfolio, we'll do that quickly. Um, so I have a couple position not yet de-risked. So SATS is a new one. That was a nice backtest of the rising 21 day structure yesterday, trying to build that cup and handle. TER extended, that's on my car. I'm trailing the 21 DMA structure. BE trying to confirm, well, it already confirmed the 21 DMA structure reclaim and backtest with a daily reversal yesterday. I would love to be able to de-risk that before the weekend. All right, so if we can have some push this morning, I should get that 2R target because that's a wild one. But if we can break out of that base, we can see some good moves in that one. Nebius super extended. I'm just trailing the structure. Same thing for VRT. Same thing for CAT. Same thing for GW. Same thing for GEV, which is close to my 2R target. I would like to de-risk that as well today. Fastly, as we discussed, I got that right at the 21 EMA yesterday. Was able to de-risk using a low of the day stop, which sometimes I do. Just I try an idea and if it works, I keep at the end of the day if I have enough cushion. So I wanted a tight risk, see if it works on that bounce at the end of the day. And as it worked, then I was able to de-risk and keep overnight. So let's see how it develops. I don't expect that to make a new high right away. I think it needs time to settle. I'm not even sure it will work and won't stop me out of the 21 DMA structure. But you look at that chart with that EP and straight up and the way it traded during that correction, you need to put a trade there once it retests the 21 DMA. ARM, nice flag, higher low at the rising 21 DMA structure. Inside day yesterday seems to gap up to confirm maybe a breakout today. Would like to de-risk that as well. Now net, what the fuck happened yesterday? I don't have a clue. But I decided to hold on to it. All right. No idea if it's the right decision. But my rationale was again how it closed the day, right? So it closed back above that recent swing low of the end of March. And that weekly chart is still showing the same setup that I was engaging in. I was playing that weekly reclaim and backtest. And with that close, we're right back at the 10-week moving average. So I'm past my daily stop. All right, that's a fact. But I want to see how we close the week. So let's see how it does today. If it craps and start to live below the 21 day structure, then I'm out. But I want to see how it closed the week. And finally, Bitcoin reclaim backtest. That chart is looking good. Let's see if we can get some momentum today. That's a keeper for me going into the weekend. No idea what will happen, but it's acting good enough to keep into the weekend. Now let's review the ideas for today. So a bit of the same names, SATs, so still setting up at the rising 21 day structure for that capital. Planet Labs, PL, same group, same team. Rejected at recent high, could set up a fail breakout and reset, so second mouse get the cheese. Let's look at April 7 swing low for maybe a shakeout, a retest of the 21 day structure. Fastly, if it retests the 21 EMA again, that might be a good spot. APLD, again, that's a reclaim and backtest setup. That's a wild horse, so that's why I didn't want to hold overnight last night with us no cushion. But if it reclaims yesterday's high, reclaim the 21 EMA, that might be a good spot to engage. Daken, Digital Ocean, setting up at the rising 21 day structure. Kava, on weakness, look for a gap fill, a retest of the 21 EMA. In that area, that would be a good buy. And ARM, if it gaps up, that's not actionable anymore. I was really having this if there was some kind of weakness at the open, red open, that would have been a great setup. So, and yeah, again, I will watch the screener, 21 DMA structure pullback. Maybe there will be other names if there's weakness in a particular group. And if that's the case, then obviously I will share in the long idea channel of the Discord. All right, guys, so that's it. Game plan for me today. To be honest, I plan to be pretty patient and boring from this point. I will share ideas along the way if you don't have the exposure that I have. But for me, if a name don't act well and I want to rotate that exposure into a different name, that's something that I will do. But that will be pretty minimal on a day-to-day basis. If we get a more meaningful pullback to the 21 DMA structure on the Qs or QQQE, then that will be a spot to be a bit more aggressive. Let's say that I was able to de-risk my position today and I'm mostly on my cores, then that pullback will provide an opportunity to be really aggressive and on margin. But it's not the time yet for me. I want to see that a bit larger pullback to really press it hard and don't have that much new positions that are not their risk yet. So now I have 4 position that didn't hit too hard. So I want to see them prove that they are working before getting aggressive on a 21 DMA structure pullback on the Qs. All right, so AMPX, what does it look like? So industrials in the weekly structure, that's good. Reclaim backtest. That's a very pop and drop stock, though. You have to acknowledge that. So it moves in bursts, right? Momentum burst, pullback, momentum burst, pullback, burst, pullback, burst, pullback. Could we set up uh, once again, or it need to go sideways a bit like last summer? That remains to be seen, but yeah, that's potentially a good entry. At least you're right in the structure, but that's not very good liquid leaders that like to trends. You just have to recognize that. Rocket Lab might be a good play in the space teams. Uh, I was not focusing on this one just because it trades below a declining weekly structure. Uh, but if we reclaim the daily, then that's a name that I will look for further on the right side for a potential back test of the rising 21 day structure. So Raj is asking, any strong plays on Bitcoin rebound? Um, well, I would play Bitcoin directly, to be honest. Um, you can size up to in the double and triple ETFs if you want. Uh, but I like playing EBIT here. We have potentially an inside day, but we're back testing the rising 21 day structure. Just keep in mind that we're going into the weekend. So there's added risk in Bitcoin as well. But it's firming up well on the right side. It's forming an handle above the rising 21 day structure. So it's acting good. As long as we hold that 21 day structure and we don't crap like the last time we tried to reclaim weekly structure, then we're all good. But uh, we're still below that March high, so we're still within that kind of stage one base. And until we break out from 74, 75K, then we're still in basing. All right, guys. So that was a long session. Sorry for that. Uh, but that's what happens when the market trying to turn, right? Those sessions will be quicker and shorter when the trend is confirmed. But right now, I know that there's a lot of questions um, and interrogation as do we have a real trend? Do we start to find a trend? Or is the correction done or just a counter trend rally and we'll roll over, etc., etc.? But yeah, I think that there was some good points. Go back into the recording at the start of the session. I covered that well. The mindset that is needed here from that point, and the game plan as well for the next few days, weeks, maybe months. I don't know, but yeah, we'll know along the way. We'll assess the trend. We'll assess how the liquid leaders are acting, how the internals are acting as well, and we'll gain confirmation as we go through it. IWM acting better than S&P. Yeah, it's stronger. Uh, it was holding better as well, and that's a good observation. The S&P 500 and the Nasdaq. If you don't look at the equal weight ETFs, then you have a lot of mega caps exposure in those indices, and a lot of that major indices weakness and destruction was in the mega caps. All right, so IWM is showing that kind of the broader small cap market was acting better, not cracking down. And yeah, that's a win. All right, so guys, 9:27 market will open. So I wish everyone a very good day. Uh, go slowly, go at your own pace. Take your time, wait for some weakness. Don't be in a hurry to increase too much exposure. The trend is early. We don't have that much confirmation yet as well, so we don't know if it will fail. Uh, and trust your position, trust your stops, and see the feedback that you get on your position. That will tell the story. All right, so have a good day, everyone, and a good weekend as well. Cheers. Bye bye.